All right, it's June 2021 and you are in the market for a mortgage and you want to know what the best rates are that are available. Well, that's what this video is for, is to give you all the best discount, full featured rates, to tell you the difference and to give you what you need in order to get a mortgage in June of 2021. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where one lucky subscriber is going to win their monthly rent or mortgage payment. No. We're not doing that contest anymore. Actually, where one lucky subscriber is going to win $5,000 to put towards their RESP, RSP, TFSA, or to pay down their mortgage. It's completely up to the winner. I sincerely hope it's you. Go ahead, click that subscribe button. It's free, it's easy, and it's definitely worth it. The definitive guide on how to manage your credit. Product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss mortgage interest rates for June of 2021. Some interesting things happening in the market right now. Rates are pretty much the same as where they were last month. However, the discounted rates have gotten slightly better priced and the non-discounted rates, the full featured rates, have gotten slightly more expensive. And I'll get into the reason why a little bit later on in the video, but let's just jump right into it and let's discuss mortgage interest rates for June of 2021. Now, when we talk about interest rates, we always talk about insured and greater than 35% down payment first. That is because these are the least expensive mortgages for the lenders because they either have insurance, so they're very risk-free, or they have 35% down payment, so they carry less risk than the mortgages between 35 and 20% down payment. Because that 20% down payment mark is the point where people have, or lenders have, the most risk on their mortgages, because that is where they no longer have insurance, but that is where their biggest loan to values are and basically their biggest mortgages are. So that's where their highest risk is. That's where their highest prices typically tend to be. So let's go ahead and take a look at this. Insured or 35% down payment full featured mortgages are priced right now for a 5-year variable at 1.45%. Of course, as always, we are recommending variable rate mortgages for 3 reasons. Not 4, for 3. One is you pay less for them up front. You always pay a premium for a fixed rate mortgage. 2 is when you go to get out of them, you have a 3-month interest penalty on most of them, so you pay less in way of penalty. And the third reason is just because they are more flexible. And as interest rates start to increase over time here, as inflation becomes a problem, as maybe there is a downturn in the Canadian real estate market, you want to have as much flexibility as possible. So that is why we recommend variable rates, because if you do end up having to sell your house, the fastest way to give a whole bunch of your equity to the bank and be underwater if, say, housing prices do come down, is to have a 5-year fixed mortgage, especially with a big bank. 5-year fixed mortgages right now have gone up slightly. They're now priced at 2.09. Last month, they were priced at 2.04. You can see that there's a pretty substantial difference in the price between a variable and a fixed right now. 0.5% is about $500 for every $100,000. So you can extrapolate from that what the difference in cost would be for you and your mortgage. But let's say you have a $500,000 mortgage and you have a 0.5% difference between a fixed and a variable. Well, a variable is going to save you about $2,500 per year. And for as long as you have that, you'll be saving money, which is why variable rates tend to save you money. Now, yes, there's always that risk of interest rates going up, but that's the piece that you have to calculate out for yourself. Is it worth paying a $2,500 or a $5,000 premium for a variable, for a fixed rate, in order to, hedge against that risk of interest rates going up? And for most people, when they start to realize just how much more a fixed rate is going to cost them, they tend to select that variable rate and look at it from the perspective of, I can lock in down the road if I need to, and I'll do that if interest rates do start to go up. Now, moving on to that 20 to 35% range, again, 20% being the riskiest mortgages for the banks, so therefore the highest price. That is going to be priced at the higher range of these ranges that I'm going to give you, and 35% being the lower prices of these ranges. Variables are now at 1.44. Sorry, that should say 1.45 to 1.5%, and 5-year fixed are at 2.9. Yeah, I screwed these up on. I screwed these up. I screwed them up pretty bad. That should say 2.09 to 2.29, not 2.094. But you know what? Mistakes happen. That's what makes us human. And I'm going to leave it in the video just because I want you guys to know that when it comes to mortgages, I'm not a superhero. I am human. Well, maybe I'm a little bit of a superhero. Now, before we get into our discounted rates, which are the most heavily discounted rates in the country, let's talk real quickly about how you can get the lowest interest rate and how you can get the information you need in order to get the lowest interest rate, which is what leads me to this topic, which is our secrets to getting the lowest interest rate course. This is a course that we've put together because we understand that not everybody can necessarily come to Mortgage 360. And in an ideal world, they would, but some people already have their banker that they're dealing with, or they have a pre-approval with their broker, and maybe they have a rate hold that is just not available anymore, but they still want to know how to get a slightly better interest rate. Well, this is what we've put together so that everybody has access to the same information that Mortgage 360 clients have. And what we've done is we've priced this course so low that anybody who takes it will get at least 10 to 50 times their money back in just knowing how to negotiate with their bank or their broker. And if they can't get it back by negotiating with their bank or their broker, I've put a special deal in the course so that somebody can get at least 10 times back their money just by having an offer from Mortgage 360. So in this course, we talk about things like how to negotiate with your bank, how to negotiate with your broker, how much margin's available in a mortgage and how much you can actually negotiate off, and the other things that you can get thrown in, like home inspections and appraisal costs to your mortgage when you go and get them from a bank or a broker. We even have a special section on renewing your mortgage. So if you are so inclined, we have priced this course again so low that anybody will get at least 10 to 50 times their money back. And I've put a discount code in the description below along with the link so you can get an additional 50% off the already discounted price. So let's continue on to discounted rates now. Moving into insured and more than 35% down payment, 5-year variables are priced slightly lower than that last month. They're now priced at 1.2%, so that's prime minus 1.25. Again, discounted mortgages tend to come with things like bona fide sale clauses, which means you have to ride out the term with the lender. You have to stay there for the entire time. And if you want to switch to a different lender for a lower rate, you can't do that. If you need to refinance and you don't qualify with the lender that you're at, you can't do that. So there's some things that come up, and the big concern I have for somebody taking a variable rate at a lender with a bona fide sale clause is that they won't be able to have any sort of negotiating power when it comes time to lock in, and therefore are going to have to pay whatever the rate that is offered to them at the time because they won't have that ability to leave. So discount mortgages often come with disadvantages by way of the fact that it takes away your negotiating power if you want to make changes in the future. So that's one thing to keep in mind. And typically the difference is a cup of coffee a week for a couple, depending on what the rate is and everything else that you have and how big the mortgage is. So 5-year variable, 1.24% or 1.2%, 5-year fixed, priced at 1.84%. This is a really great rate. Last month it was 1.89. So if you are a first-time home buyer and you are absolutely intent on getting a 5-year fixed mortgage because you don't want to worry about interest rates going up, this is actually a really great option. 5 years down the road, I'd probably refinance out to a different lender without a bona fide sale clause or no refinance clause, or to a more sophisticated non-discount mortgage. But for a first-time home buyer, this could be a great option if you know the risks and you understand the risks. Now, moving into 20 to 35% down payment, 5-year variables are priced between 1.2% and 1.25%, and 5-year fixed are priced in that 1.84 to 2.04 range. Now, the one thing, again, to remember here is when you're putting more than 20% down, you really want to be careful with discount mortgages because you lose the ability to get your equity back out with any lender that isn't the lender that you're at. So just something that comes along with super low rate discounts. That's why we talk about that in Secrets to Getting the Lowest Interest Rate course. All the landmines, all the surprises that come along with paying the absolute lowest rate. So it is one thing to get a really great rate. It is another thing to get the absolute lowest rate and end up with a mortgage that's going to cost you more over time because you didn't realize that it had things like higher penalties or the inability to save money down the road. But that's why we put that course together. Or if you want to get a mortgage directly through Mortgage 360, we explain all of that to you in the process and we'll help you guide you through all the steps that go along with selecting the right mortgage for you. So if you found this video useful, do me that favor, hit that subscribe button, hit that notification bell. Please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers. Go ahead, click that subscribe button. It's free, it's easy, it's definitely worth it. And we'll see you on the next video. Cheers.